Hi, my name is Mark, and I'm a professor of economics. In this video, we're going to be looking at how cryptocurrency like Bitcoin, Ethereum, Ripple is different from trading traditional currencies like the Great British Pound, the Euro, the dollar, the Zloty, the Yen. And by looking at these differences, we're going to be able to identify, perhaps for you, which is a better investment. How are they different? What does this mean for you in terms of making your financial choices? So let's first look at traditional currency trading. Let me put all the cards on the table. Traditional currency trading is a zero-sum game. That means for every winner, there's a loser. I don't care if you feel like you're a genius, you've studied all the technicals, you know the Bollinger Bands and the moving averages and momentum and every indicator out there, and your friend works at some big investment bank in New York. It's a gamble. If you have two guys, one who's holding US dollars and another guy Great British Pounds, basically the bet is one will go up in relation to the other, and you can trade these all day long. If you get more complicated, throw in other currencies, yes, it gets more complex, but essentially it's the same. It's a zero-sum game. A currency will go up or down. We can explain it with fundamentals of the strength of the economy underlying it, or the quantity theory of money. And maybe they've got some knowledge about this. And each person has studied up and prepared for battle. They know the technicals. They have the greatest computers and the charts out there. But at the end of the day, it's still a zero-sum game. For every winner, there's a loser. And if anybody wants to contest me on that, you put it down on the comments. Well, you can say, well, Mark, what about all the people who have won? I know this guy, he's done for 5 years. He's done currency trading. He made a lot of money. You know what that is? That's a guy who flipped heads on a coin toss 10 times in a row, 5 times in a row, 20 times in a row. That's all it is. If you really understand what a zero-sum game is, in fact, currency trading is a little bit of a negative-sum game because of the transaction cost. And is that better? The casino. I know people that go to the casino, go to Reno, and they're at the casino, Vegas, wherever, and they say they're winning. They have a strategy. They planned it out. Everybody thinks they can beat the casino. It's the same thing. Currency trading is a zero-sum game. You're not going to win consistently in the long run. And if you do, you're the lucky guy who flipped heads 20 times in a row, statistically, because it's the nature of the game. Stock market is a positive-sum game, and that's another conversation. So if you're all geared up for battle, and I think, like in chess, I think I'm going to beat everybody. I play chess. I know the Sicilian hyper-accelerated dragon fianchetto variation, and I'm going to go out and beat that guy. But it's just not what black does, it's what white does. He's geared up too. There are too many. Chess is a better example because you use pure intelligence. Currency trading, there's too many exogenous variables that you can't even account for. Even if people say, well, he's a genius, he's intuitive, it's baloney. It's a coin toss. Maybe there's some edge with information, but the way computer algorithms run so fast today, it's still a coin toss. Why is cryptocurrency different? Cryptocurrency is very different. Essentially, it's the same. It's FX trading. It's currency trading. But there's a huge difference you have to understand, and this has implications for your life. With cryptocurrency like Bitcoin, Ethereum, Ripple, Litecoin, and whatever iteration will be out there next, you're investing in an idea. In the 1990s, people weren't buying Microsoft stock and riding it to the top because they thought the fundamentals of the company were right or the technical. No, they were buying the idea that every person could have a personal computer on their desktop, the decentralization of computer power. You didn't have to go to some monolithic NSA, NASA supercomputer running with 20 different air conditioners running in some big IBM office. You could have a computer on your desk. And so the same idea is there for decentralization of currency, cryptocurrency. Yes, it may go up, it may go down. And with every revolution, it goes back and forth. One step back, two steps forward. They overthrew the kings and queens of Europe, and then Napoleon comes back, and then democracy comes again. But once the idea is out there, you're investing in the idea. And is it oversold? Is it overbought? Is it too high? Is it a bubble? I'll talk about that in other videos, and I suggest you subscribe to hear the answers. But think of it like an S-curve. We don't know on the S-curve where it is. I have my intuitive feeling. I can tell you based on my analysis of economics. So understand, cryptocurrency investing, buying Bitcoin or Ripple or Ethereum is very different than FX trading. FX trading are mature markets. They're already done. It's already played out. To win, somebody else has to lose. For cryptocurrency, you're buying the idea. The idea that money will eventually become decentralized again, as it was in the past. And this will push us to another frontier. That's my analysis of currency trading versus cryptocurrency investing. Thank you very much.